the stock market is not doing well. It has been like tanking, especially the Nasdaq, the high growth stocks. They have been tanking over the last couple of days, down about 10% from where they were at all-time highs a couple weeks back. And things are not looking good right now. Jim Cramer interviewed the other day. He was talking about how the sell-off is real. A lot of people they're not believing it. He said people are in denial right now about what's going on. He says, and it's going to keep going down, he says, until people really accept what is happening. He said people need to have some money on the side ready to put in so they can fish at the bottom. When things finally level out, they bottom out, we start seeing everything rise back up. People need to have money. And the problem is right now, a lot of people use Robinhood. They max out on margin, use more margin than they probably should be using. They've lost money now. They got margin called, and now they're going all in on their one favorite stock. And that's not the way to go. That's how you're going to lose everything. That's how you're going to hear these stories of people losing everything, even though in reality, the stock market will bounce back. It's a matter of when, but you want to be able to use this as an opportunity to take advantage of what is going on. So Jim Cramer, he goes on to explain how people are in denial right now. And there's 5 stages of grief. And the 5 stages are denial, anger, bargaining, depression, and acceptance. He said we are still in the denial phase. People don't accept what's going on. And until we accept that this is real, the sell-off is real, well, then we're probably going to see it continue to drop. And the scary part is the Nasdaq has dropped about 7 to 10%, but the Dow Jones is barely down anything at all. It's barely down anything from where it was. If we look at it compared to the Nasdaq, it's actually up. The Dow Jones from where it was a month ago. It's up about 0.5%, almost 1% from where it was a month ago. And if we really see a sell-off, we're going to see all of these come down. We're probably going to see the Dow, the S&P, Nasdaq, all of them are going to come down significantly because the Dow Jones has not come down at all yet. And really all of this was driven, the market correction, crash, whatever you want to call it, all of it was driven by Jerome Powell the other day. He came out, he spoke about what's going on in the market, interest rates for the future, and right now the 10-year Treasury yield jumped to a high of 1.62%. Most of the day it was around 1.57%. That was the highest it had been all the past week, the week of, the first week of March 2021. On top of the 10-year Treasury note, also, we got a jobs report from the Labor Department for the month of February 2021, and this was actually better than people expected. People were expecting 210,000 jobs added, jobs gained, but actually we got almost double that with 379,000 jobs gained. So that was great news, but people are worried about the yields, the Treasury yields getting higher and higher, and these are going to present a lot of headwinds for the speculative tech sector stocks that have been on a lot of people's portfolios and the ones that have been hit the hardest recently. So we're going to have to wait and see what happens. But the thing is no one knows how long this is going to happen for, how long this correction, crash, or whatever you want to call it is going to take. We know the market's not going to zero. We know it's going to come back. It's a matter of when and how long it's going to take. So make sure you have some money on the side so you can be ready. You could buy things that you like that are at great prices, great deals that we haven't seen in months. You can get in on those companies that are solid companies that you really like. Now is a great opportunity to get into those because those are the ones that are going to bounce back the fastest. The really speculative companies, people are probably going to stick away for those for a while because, let's say you're generating $30 million in revenue and you're valued at $5 billion. Like, there's a little bit of a disconnect there. I get that these companies have, great outlooks for the future, but there is a bit of a disconnect there on valuation, especially when we're seeing the market trend downwards. it's going to be important to be in those companies that have significant cash flows, significant amount of revenue, and are the solid companies. So make sure to keep an eye on that. We don't know how long this is going to take. I'm not saying the market's going to crash. I'm just telling you guys, the 10-year treasury yields are higher than they've been. We're getting more stimulus passed. The economy is looking good, but there's a lot going on right now that you need to just keep an eye out for the next